Hi, we're here today to do a little update on the economy. Uh, Doug, one question that I've been hearing a lot lately is when are we going to have a downturn? We've had so many years of bullish and just growth. Aren't we due for some sort of market correction?
Well, you're correct. We've been bullish and positive on the market for the last 12 years. And actually, we're still quite positive on the market because, we have several evaluators that we use. One has to do with the earnings of companies versus the price that companies are trading at. And we have this chart that we'll show right now. And it shows that basically the price of stocks move pretty close to the earnings of the company. And right now, their earnings are above the value of the market. So the market's not overvalued.
Are there other indicators?
Well, we've mentioned it on several of the videos. We also like the technical analysis of Dorsey Wright with a bullish percent. And right now, the offense is on the field. And we're midterm on all the indicators. We're like around between 40 and 60. So the market's not overvalued at all.
Are there things that we can do to then protect ourselves for the unforeseen?
Well, one of the big problems that I've had over all the years of being in this business is you always have the doomsdayer saying, "Oh, the market's going to go down next week or whatever," and occasionally a person will get it right, but it's really just a lucky guess. The fact of the matter is, you're just not going to predict it. It's going to be something like the World Trade Center is hit by a terrorist attack, or something like the crash in 1987. It's a pandemic. No one expects it. It just happens, and the market takes a huge hit. So the best you can do is just be in solid stocks that will do well in good times and bad, and then what happens is when it's a bad situation, people run to these high quality companies that have low debt and high earnings in good times and bad. That's the best you can do to defend yourself.
So you're sort of large company, solid.
They can be small too. They just need to be solid. Low debt, history of growing their earnings at double digit, able to grow their earnings in times of recession. Those kind of companies will do best in a downturn.
As far as the broader economy goes, do you have other updates for us?
Yeah, we've mentioned it before. Inflation, I think, inflation is here to stay. The Fed, and through our stimulus, has grown the money supply by over 30%. This is record levels. The last time we saw anything like this was in World War II, and there was good reason. It was a world war. But the last time we did it in a similar time was under the Kennedy and Johnson administration, and they were only growing at about 5 to 8% money supply. And at the end of the next decade, we saw, runaway inflation. So I kind of think we're in a similar situation. All this money that they're pumping in, and the Fed being very dovish with the money supply, is going to lead to permanent inflation that we're going to have to deal with in the next decade.
And as we talked about in our last video where we really talked about inflation, the things that really do well in inflation are equities and real estate, right?
And commodities. And those are the areas that we're most positive on. We don't care for bonds, and cash will not be king in a rising inflation rate environment.
Well, that's it for today. Thanks for watching, and we'll see you next time.